What is going on, everybody, and welcome to another weekly update. And what I like to do in these videos is provide you some events that are coming up, some potential earnings, and things you need to be watching out for, and maybe some stock picks. With that being said, remember to hit the like button and subscribe if you haven't done so already, because I do provide daily and weekly updates to get you prepared for the day and the week ahead in this glorious market. So, before we get started, like every weekly update, I like to go ahead and post this up here to give you guys a bit of insight as to what's going on. Yes, there's other events. Yes, there's other earnings. These are the ones I am watching. These are the events that I think are most pivotal throughout the week. Some upcoming events here. I actually changed this a little bit too because I believe these are the more pivotal events to occur. So, upcoming. Nonetheless, um, this week or this past week, what has really gone on this past week? The biggest thing is we are in earnings mode at this point till November 2nd, where we get monetary policy. It's pretty much just earnings. Yes, the ECB rate decision is on Thursday, so keep that in mind. That is before open. That is going to be very pivotal into what our monetary policy is. But with that being stated, I would like to say that I think the market is becoming extremely numb to high interest rates. Again, if you continue to pound high interest rates or any bad news continuously, the market's going to become numb to it and it's not going to care anymore. So nonetheless, I don't think the ECB interest rate is going to have as much weight as it did, but it could potentially have some weight this week. So again, we are in full-blown earnings mode. Last week, we had Netflix. They came out on Tuesday. The biggest takeaway from there is that they lost 1 million subscribers in the beginning of the year. Now they pretty much gained them back. And their ads have actually done extremely well. I believe they sold out on every ad, which is great. But if you go along the thesis of what I'm talking about, right, people are cutting back and buying more into services, into rentals, trying to liquidate their homes, realizing that houses are just getting they're unaffordable to just about anybody. It doesn't matter if you're upper class, upper middle class. It is extremely hard to purchase a property, and because of the high interest rates. With that being said, you're seeing the destruction in the housing industry. There's been massive pullbacks. A lot of the data that comes out with housing, again, it's not going to directly affect the market until you get some collapse, some banking system or massive bankruptcies or something like that. That's headline news. Will that actually scare the market like in 2008? But when that, I have to understand that this is what's going on in the background. So this initial data really isn't going to affect the market. It's not going to pivot the market until something occurs. This is AKA a black swan. All these things I talk about are things going on in the background. Pay attention to, and then if they make headline news, that is your black swan event that will potentially crash the market. Maybe not crash the market, but you will get a huge dive at that point. So with that being said, we had Netflix. It was okay. No biggie there, right? They essentially made back. People are trying to purchase cheap entertainment. Next one we have up was Tesla, the big one today, or on last Wednesday, and they barely beat. They did okay, and that's the problem. Is that one of the best innovative companies is doing okay, and that's not a good sign. Essentially, and they're also looking to purchase Twitter. Again, this is an ongoing discussion. There's more talk about Tesla even potentially selling, or Elon selling more shares to be able to purchase them. But there is a disclosure in the document, essentially, that it would take a loan to cover some of that cost, and understanding that rates are so high. I don't know if something I talked about this theory that Elon could be just trying to pull money out of the market. So he used Twitter as a scapegoat. Understand that if he tries to entail this loan into essentially this purchase, that interest rates are so high, Elon Musk couldn't even get approved. The odds of him getting approved are very slim, considering the dollar is extremely high. But with that being said, So you had that again, weakness in one of the best innovative companies, not a good sign. And then you had Snap. Snap, I don't know where it's getting as much weight as it has, but they ever since Apple's essentially just blocked them from their devices. Uh, a lot of people out. Some people will be able to adjust, but Snap has not, and they continue to just falter, and they can't sell ads. Being said, a big earnings you need to be watching this week is Tuesday with Google, and with their ads. Their one of their biggest revenue sources is ads on YouTube. And so, being said, we want to see how big it's been hit. Is it going to take the Netflix approach where it sells out, or will it land somewhere in between on Snap, or just completely bottom out? That is what's concerning this week. And if you haven't noticed, guys, this week is one of the biggest. This is like the Super Bowl week of earnings right now. And so you have a lot of big corporations. Again, these are just some of them that are reporting this week. So there's a lot of weight going into this week on these particular companies. But with all that being said, with last week being said, Friday, we had a killer pump Friday. Now, what was the reason essentially behind the pump? Was that the Fed is going to pivot. Every time the market gets close to 3,600, there is some sort of rumor drop or media drop talking about a pivot, and that essentially the Fed are going to dial back after another 75-point basis move. But it's all pending. Of course, it's going to be pending because it's all pending on the core inflation. Inflation is not coming down quick enough. Another 75, maybe then we'll have to see on the next report, not this coming report. Again, this next report will be on the 10th. So we're looking at the 13th report of December is really going to gauge what the monetary policy will be on the 14th of December. So that's the core and that monetary policy are lined up in the middle of December. Going to have to see what happens there. Nonetheless, if inflation starts to spike back up at all, that is going to be a major concern. And so, again, we're going to have to see. But we haven't got any new bad news aside from really shitty earnings. This week could potentially pivot and make the market sell. Maybe the market finally breaks 3,600. But you have to understand that, again, something I've been talking about is a price action around 3,600. There was heavy buying around 3,600. Again, I talk about all these black swan events. One of these black swan events has to essentially happen now if you want the market to correct any more than it already has. Now, I've been talking about, that 43% correction is on average for a recession. And we've roughly hit roughly around 25, 26, I believe it is. And so we could still drop quite a bit, but we don't have to hit 43 again. We can come lower or higher than that. Just on average, it goes to 43%. Now, if a black swan event occurs, again, one of these things we've been talking about that's happening in the background, if it happens anytime around now while we're flirting with this 3,600, that will give us the extra leg that will drop us 10, 15, 20% from here. Again, if none of those play out, maybe we just continue to grind back up and then something plays out and then we fall a little bit shorter. But right now, again, hopium is extremely powerful in this current market. You have to understand that if you start talking about any potential pivots, the market is just sucking it up. It doesn't matter if it's true or not. And so you have to be mindful of that. And then we get the true data, the true pivot data on the 10th or the 13th or the 2nd, and we realize that nope, things aren't any better, and then we correct right back down to where we should be. And so, but again, as soon as we hit new lows, as you can see here, we're just being bought up. This was absolutely absurd. Core CPI came out, we got crushed, and it doubled that same day. It dropped 100, gained 200 points. Again, there's some big institution around this level that is just buying up crazy amounts of shares at that level. So again, that's currently where we're sitting. Again, we got a lot of earnings this week. key is are we going to get bad earnings and sell off, or bad earnings and run, is the question. And then what other pieces of information we may get this week about whatever the case is, about more quantitative easing. Again, if more rumors like that come out, you could be feeling, again, if any of these do well, you have to understand that's going to be provide fuel. The market will start running into potentially the 10th, in which it would correct because maybe the core becomes in high, or maybe the core comes in lower. So we could get a cascading effect where if we get a bunch of good news, could get a pretty nice rally again. But if we get bad news, I think we're going to float around the 3,600 mark. Or we're going to sell more. It's hard to say because I don't think, again, you need new bad news to one of these black swan events have to play out for us to like continue to sell past essentially the 3,500 mark. So we will see. We'll see what happens from here. But again, Tuesday, we got Microsoft, Google, Visa. Again, I'm not playing this, but Visa is very important. I want to see what their growth rate is on credit cards. Chipotle has always been killing it. It doesn't matter where it's at. Chipotle just kills it. It's a great continuation play. That's why I put it on here. Wednesday, Meta. I don't care about Meta. Meta might actually take a big hit if it follows Snap and Google. That will be big on that. Microsoft, looking at the cloud space there, want to see how cloud is doing, service-based stuff. We want to kind of gauge how that's doing. We'll get more of that on Thursday with Amazon and their cloud. And then we got big, you got Shop, Amazon. We're looking at the retail side. We want to kind of see where things are at, especially since, again, what is concerning when FedEx is dialing back and doesn't really know where people are at. Again, this could be a really bad, a dark Christmas. There probably won't be a lot going on potentially this Christmas. And considering that, again, people are charging a lot, we want to see what the growth rate is, and then realize that, the savings rate is at one of the lowest in history right now, which is definitely not a good thing. And then we have Aapl, another really, really good company that we want to see where they're at. If they have any cracks, that will definitely take down the market. There's been a lot of bad news about Aapl over the past couple months. We want to see what is actually going on, and this is the time to see that. As far as potential moves, what the market is pricing in is 113 points. The volatility on the SPX is still very high. Again, obviously, you're in big earnings week here. SPX, again, normally trades roughly around that 60-ish on a normal. Without volatility, roughly around that 60 mark, potentially lower sometimes, potentially around 70. It just depends. But right now, it's extremely very high. Tesla just hasn't been a Tesla of old. Tesla got neutered essentially since it's had this stock split. And sadly, that's what happens. This is why I'm not a huge fan of stock splits, because they're diluting shares. You don't get the big moves that you used to. So you're having to look at other places. But this is why these companies do that, so that when there's a lot of volatility like this, you're not getting 100-point swings both ways. You're getting maybe 50-point swings, which helps the company kind of stabilize their price a lot better in a market that the market that's doing really bad, especially currently as of right now. And that what happened on their earnings could have been a lot worse if it hadn't done a stock split. It could have been a 100-point drop to compare to what it was. I think it even actually did drop close to 100 points, so it could have potentially been like a 200-point drop. So that's why they do it to preserve that market cap. So with that being said, that's pretty much this. Let's get to some technicals. Again, SPX, really watching 3,600. Again, they're going to have some bad earnings. We are hitting this top range, which is roughly around that 3,800. Maybe we got a little bit more gas. If we can do well on some earnings, Apple in particular, or even Tuesday, if we report good on Microsoft and Google, that could be enough to break us out of this and potentially start running, potentially up to the 39. Maybe 4K. Really just depends on how things play out. Again, if things do bad, you can guarantee we'll be back down here roughly around that 3,600 and flirting with that line again for the rest of the week. So again, watching that range, we'll see if we can get a breakout of 3,800, or if we're back down around 36. Again, if we're back around 36, I think the market's just going to hover around there until the next, again, monetary policy. which again, I don't think it's really going to do much. Again, people are getting numb to 75-point basis moves. They kind of expected it at this time, even though it's very historic. It would be 4 75-point basis moves back to back to back to back. But with that being said, we'll see what happens there. Going to start looking at the dollar a little bit more here. The dollar, trying to see if we can get weakness here. The dollar just has not really shown any signs of weakness. These pullbacks are not much. And if this thing starts to run again, which it could potentially here, again, we look to see if this really starts to break out. Again, we are in a new term here. So essentially, we could start breaking out back to the upside and seeing what this does, especially running into the holidays. We want to see what the dollar does here. There's going to be more demand for food. There's going to be more demand for fuel going into the colder months. So we got to see how energy in that does play out. Enphase does report on Tuesday as well. I don't have that down, but we want to see how energy is doing on that side of the house. Bitcoin, again, Bitcoin isn't really doing a whole lot. This is why I don't really like to mention Bitcoin a lot. Isn't a big consolidation right here. Again, really waiting on the market. The markets, again, I believe crypto will have a big breakout once the market turns around. The question is, when is that going to happen? Could be a very long time. Accumulation, DCAing in crypto right now, I think, again, not financial advice, but could be a good idea. But just be aware that we could drop again, but how much, I'm not really sure. We need one of those black swan events to really play out for that to occur. So with those being said, let's go to Tesla. Tesla again been struggling. If that news with selling more shares is true, again, I think Tesla will break the 204, and then again, I'm really watching that 184. I'd really like to grab some Tesla here under 200 would be fantastic. We will see. Again, there's things aren't looking great just in the general market, so Tesla's going to struggle. And so with that being said, I think things could potentially be lining up for a good potential like Q2, Q3 for Tesla. So right now it's more so just accumulation phase. I think if you are interested in Tesla, again, not financial advice, but I think right now is a good accumulation phase, and then we'll see how it plays out. So what I can do is try to accumulate as much as possible down around this area. Hopefully we could break 200. Again, we will see. It's been trying to break out and then breaks down every time. And again, you have to understand if any of these financial systems fold, then these things can correct very quickly. Again, Japan was also buying bonds as well this past week, which helped us pop a little bit too. So there's some a lot of manipulation trying to contain the fear of a recession. And so every time again we float around that 300, whether it's quantitative easing or inflation's not going to be that bad, things are going to be great. It seems like we get a cycle like that like every 2 or 3 weeks to kind of let things pump, and then the real news comes out and then dumps everything. So just be mindful of that. So BA again, fall in the market, looking pretty strong. Retest the 50. And it's the first time really retested the 50. I won't actually be surprised if it rejects hard. This also comes out on the 26th. So this is this week as well. So watch for BA. BA has a lot of weight, but also understand that normally does bad anyway, and so it will sell, and then pretty much everybody just buys up the dip. So that's why I hate playing BA, because it absolutely makes no sense. But nonetheless, the banks were extremely strong, again, based off the news that we would be dialing back on rates. Again, we have to see it. The market's going to push off a hopium. This is essentially what pushed the market up. But we do have resistance at the 125. Question is do we have enough headroom here? Or come Monday, do we just start selling back off and then retest again? One thing to understand is patterns, again, haven't been playing out this year, even though this is a break of the downward trend. Normally, we do a retest on a break, and then we've been just selling back into that channel. So, again, even though it's breaking out, normally you retrace 75% of that breakout, but it just hasn't been playing out this year. Nothing has been playing out this year. Pattern-wise, this is why you shouldn't be a pattern day trader, because it really does not play out. Not in this particular market. There's cycles when it does, but this is not the market for it to be playing out. This is why I've done supply and demand. I've always done supply and demand because it's a lot more accurate. Again, not everything's 100%, but it gives you more understanding of where things could land and things could sell at. So that's why I go with that. GS, again, very strong. All the banks are very strong going in. So same question. We'll see what happens come this week. Again, looking for the heavy hitters and how they're going to perform. So again, another big week, sheer earnings. Again, that event on Thursday with ECB interest rates, it might have it unless it's really, really high. I really don't see any impact there, or really, really low. Again, I don't really see any impact from ECB. It has shown that it can carry some weight, so you have to be mindful of that. So if we get a big move on Thursday morning, that is what it's from. It's from the ECB. I think we'll be moving more beforehand anyway, especially after Tuesday close, because we get a lot of heavy hitters when it comes to earnings. So I think Tuesday we'll start getting those bigger moves, and then Thursday will be that second leg of bigger moves. So just be mindful of that. So busy week. Just again, manage risk. I am getting into futures as well, so I'm going to start doing some futures a little bit as well. Doing that. I've been trending general index anyway, so it's not much of a difference, but trading wise, futures are very different. So going to start dipping my toes in that a little bit more, and then we'll see where we go from there. So if you made it this far, I do appreciate you. Go ahead and drop a like button. Till next time, I'll see you guys later.